Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and I'll be guiding you through my view of the stock market sectors as well as a few individual stocks for the week of April 23rd. So, welcome here. Before we get started, just to remind you, we are not broker dealers or investment advisors. We're going to take a look at this information from an educational standpoint only, not telling you to buy, sell, or hold in particular securities or give any personalized recommendations. The past performance is no indication of future results, and we are not subject to trading restrictions, so we can have a position in a security and initiate one at any time. Please stay in touch with me. Let me know what you like, don't like, what you'd like me to talk about. If you got any suggestions or recommendations or requests, I should say, hit me up at brandonwendell.cmt@gmail.com. Please follow me on Twitter. And of course, if you could help us out, hit the like button and subscribe. Make sure you get notified when we have new videos for the Wendell Effect on YouTube. So we're going to kick this off again, taking a look at what's going on for sector performance for the week of April 23rd. And over the last 6 months, seeing a weird pattern here. I mean, energy is definitely falling off. Normally, these are the stocks and the sectors you'd expect to see when the markets are bullish. These are the ones you'd expect to see when the markets are bearish, and we're getting that rotation. Over the last month, it's more of a flight to safety. As you can see, utilities are starting to lead along with the energy, staples, and healthcare. So this has been a flight to safety over the last month. Well, looking at the XLY, consumer discretionary, this is definitely not a sector in favor right here. You see, we tried to make a move to the upside. We're pretty much going sideways with the lack of momentum. So you're going to want to look elsewhere for bullish or even bearish opportunities. This is just going to continue to be choppy, moving sideways. Looking at the communication sector, we're getting a bit of a pullback. We had a negative divergence as we retested an old supply zone. This is now kind of resistance, and people are using it to push back, but it's weird. When we're pulling back, we're getting green candles, which means every time we jump down, we're taking a step back before we go lower again. So it's a very choppy market, but overall, it looks as though we're still correcting. We haven't put in a bottom yet. I suspect we may continue to do that this week until this 56.35 area on the ETF. On to technology. This is kind of flattened out and we're losing a bit of momentum, but we're not becoming bearish. So technology still may rally again and push upwards. We made it to our first target inside the supply there, the 0.618 projection of the previous, this previous impulse and correction right there. The next target, if we do base right here and start to rally, should be around 156. But we need to get more momentum and push this above 60 on the RSI for that to even happen. On the building materials, we can see a little bit of weakness coming in. We could not hold above 60. We went into supply pretty deep, but are pulling back now. Watch to see what happens when we break this 80 area of price. Right around that 79, that should act as a little bit of demand. I know I've got it more down to 77.88, but we should see a little bit of a bounce here at 79, especially if we're not below 40 on the RSI. That could carry us higher, but we need to be above 60 on the RSI to break through this supply zone. On to energy, this is definitely pulling back. The question is it a pullback or is it a reversal of the trend? So you can see that we had a negative divergence. If that negative divergence gets followed up with a little rally and a high that's below 60, then I expect this to continue down, close the gap, maybe even get weaker. But we should be coming off the inflationary pressures that have pushed us up for quite some time. The staples have been a strong sector last week. As you saw, we were kind of beginning that sector rotation into flight to safety. We had the big gap up. The big question will be, is this an evening star, shooting star? You can see we got nothing but selling pressure when we opened up with the gap up. If we gap down on Monday, that's that reversal pattern, but we're very, very bullish, which means if we do pull back, we're probably going to only pull back to about 75 before we flatten out and maybe try to bounce by the end of the week. I don't see us making new highs. But if we end up gapping up or moving sideways, then yeah, we might get a little bit of flatness here at 78 as we try to poke to a new high. But we do have momentum to go a bit higher. So just watch to see where the big open is on Monday is the big key right there. If we gap down, expect a correction. If we go sideways or gap up, expect to move to the upside. The healthcare sector looks like it's ready to rally again. We had a small correction here, about 23%. And right now we got plenty of bullish momentum, but we need to make a new high in price. At the same time, we're getting new highs in momentum. If we don't, we get a divergence, we'll correct again. But if we get that high and we get more momentum, That's where we're going to reach out towards our target of 139.55, just underneath the supply zone for the week. So keep an eye out for that. But like I said, if it fails and we get a divergence, we may go a little bit higher in price, maybe about 137, 137.50, but then pull back to about 134 again. On to utilities. They're looking a little bit better, but not great. You see, we just made another rally on Friday. Couldn't hold it, couldn't get momentum. This is not done correcting. We look like we're going to be a bit choppy and sideways, even though it was a leading sector for the past week and past month. Looks like we could pull back a little bit and actually see prices move all the way down to 67.44 by, well, probably not this week, maybe by next week. But if we can build up any momentum, it doesn't look like it wants to, but if we do build momentum, we're going to get stuck at 71 anyway. On finance, it looks like we had a recovery from all those bank failures, but it was only a 50% recovery, and we couldn't quite keep it above 60. So we may be getting ready to roll back over and push back down, but it's going to be a very slow move down. It's not going to be as fast as what we saw with those bank failures, unless we have another round of those, of course. But for the most part, I'm expecting kind of a gradual decline, maybe finishing up around 32 this week. And finally, real estate is just going sideways. There's some cracks in the armor. Again, we cannot seem to get above 60 anymore. So this correction at 38.2% of the previous downward impulse is getting ready to continue. And we're going to start to see this real estate sector dropping with, our first target's 33.02. We got a long way to go there, but it may not start this week. We might just drift a bit sideways and slightly lower before the cracks really open up and break. Now, with the trade ideas, following up from last week, we had EA on the 4-hour chart. Unfortunately, this kept going. Never pulled back to let us in. Nothing we could do about that. And same thing with RSG. It did pull back towards the entry points, but did not actually hit the demand zone, unfortunately. So unless you adjusted and use this as your entry based on demand back here, you missed out. You're going to have to throw both of those out. They've already hit the target, so I'm no longer wanting or waiting for them to pull back. They're not likely to work. Same thing with UNH, unfortunately, warned us not to go long because when it came into the demand zone, if the RSI is below 40, demand will not stand, and sure enough, it didn't. So we had too much bearish momentum, push us right through that zone. And we're going to move on for our new trade ideas for this week. We have XL Energy, XEL. You can see it's a short-term trade from April 23rd to the 28th. 90% of the time over the last 10 years, we had a pretty good rally. Actually, I can move this out of the way a little bit so you can see. See if that works. There we go. Yeah, again, last 10 years, it has been pretty bullish, as you can see. Had a pretty good rally, actually, 4.97 points or 1.33%. So basically, we need to pull back into a demand zone before we can go long. That demand is 66.91 to 68.11. Looking for our target number one, 72.93, just below supply, and then 75.69 for target number two. And be careful, we do have earnings coming up. That'd be great, actually. If we get some earnings that drive us into that demand, boy, that's going to give us a nice bounce. So keep an eye out for that. Next, we have MCK McKinnison Corporation, 90% winners, again, for the last 10 years, as you can see, kind of covered up. But the average return is 6.35%. This one's a little bit longer of a trade, though. You can see it's until the end of May, so about a month here. Again, we're working our way down, almost in a correction right now. We got a demand zone, 348.94 to 350.86, looking for target one, 367.82. With target two, not really supply, but lots of selling pressure at 377.62. Next, we have ExxonMobil, 90% winners for the last 10 years, and it's almost a 4% gain that we're looking for the next couple weeks here until the 16th of May. We are in a sideways congestion. We have earnings coming up. I do not typically buy the breakouts, which is what's likely to happen with the earnings. We'll get that sideways move, then the breakout. I typically wait for a daily close outside the range and then a retest and buy the retest. That's usually what I wait for. If you want to be aggressive, you buy the breakout, or again, you wait for the retest, stop loss below the range, or below a low inside of that if you want to tighten the stop a little. And then we have our targets, which are projections of 123.28, 129.50. Anyway, that's what I got for you this week. If you got any questions, please hit me up, brandonwendell.cmt@gmail.com. You can also follow me on Twitter @TraderBDub. And if you wouldn't mind, please hit like and subscribe. That'll help us out quite a bit. Thank you for watching. Talk to you again soon.